Let's talk about how to get rich from a market crash or a market correction. And if you guys are newer to the market, you may think seeing red in your portfolio is a bad thing, but it is actually a great opportunity to make a lot of money if you position yourself correctly. So we will be going over the hedges that I have that are working exceptionally well, given we have really not even went into a crash or a correction yet. But long story short, I do believe we are headed that way, and what you guys can do in your portfolios to hedge your positions and play the downside. Now, I am a full-time options trader. I've been doing this about 3 years now, and I know every single strategy, and this has been a passion of mine just because options can truly change your life. And I watch the markets Monday through Friday. I don't miss a beat when any news comes out about companies, and you'd be quite surprised how many news events and the sources that I use to uncover these news events and rumors. But I do follow these all the time, and I am starting a Patreon in the next day or so, and I really want to make this affordable so you guys can get in on these trades if you so want to as well, and really have a lot of you guys being able to be involved in this and benefit from it. So that's why I'm going to keep it affordable. It's going to be live in about the next day or so. That is totally a premium service. You don't have to do that. I'm going to start covering my trades more on the channel, but if you really want to make the gains along with me, then that's something you guys will want to be a part of, because I will send you out an alert as soon as a trade is made. With all of that out the way, hit the like button for me, consider subscribing to the channel if you like the video, and let's get into it. Now, I do want to point out my account has just been getting absolutely destroyed because pretty much the majority of the stocks that I do own, besides Rocket Mortgage, UWMC, and Abivai, are tech stocks. So they have been absolutely getting beaten down. So I'm down like $1,000 today, but I don't even care what this number looks like. I honestly don't, because I am younger, so I can hold these stocks for a very long time, and this will all play out in due time. So I wouldn't be too concerned about what your guys' portfolios are doing. Just make sure that you're not in range of a margin call if we fall 20-30% on the overall markets. Now, as to the hedges that I have been putting on my portfolio, I did do these about, I would say 2 or 3 days ago. I believe I bought this May 10th, so 2 days ago now, for $51. When I seen a little turbulence in the market, I knew the inflation data was coming out today in the morning, and it did come out high like I had thought. So I bought this at $51. It is currently worth $237. That is a gain of $186, or 364.71%. So a phenomenal return on this trade, and I actually think this could go in the money, and it does expire May 21st. So that should be a nice 1,000% gainer. That would be taking this total value to about $510, because 51 times 10 is $510. So I do think it'll hit about that range. Maybe if we sell off even more, it could go higher. But as far as the other trades that I made to hedge my position, I did get another put, and this one is further dated out. I got a SPY 315 put for June 18th at $51. When did I get this? I got this 14 hours ago, so in the beginning of the day today. Also spent $51 for this one, and the key here is to keep it small, because if these hit a couple thousand percenters, if we did get a market correction by your expiration date, then you would make a ton of money on these. And I think it is quite possible we could go down on the SPY to the $315 mark. So I do think it's possible to get here, and that's another thing. You'll want to choose strikes that are theoretically possible to get there. Now, I wouldn't have bought a 150 put on the SPY for June 18th unless I was trading this and flipping out of it, which I do sometimes. But I think these do have a good potential of going in the money, or at least close to the money, so essentially going up a lot in value. Now, like I said, I bought this at $51, expiring June 18th, and I am up $38, or 74.51%. Absolute phenomenal return on this as well. And like I said, I do think we have a chance of going in the money on all of these SPY puts. Now, as far as some of the other hedges that I did do, I did a UVXY $5.50 call, and I actually bought this a while ago, and I was down on this a lot. Like, this has totally came back to life. but I bought this April 22nd, and the SPY, that was really when we started to get some big drops, but we rebounded and even went higher. But I bought this April 22nd at $64. I bought this at 1:45 p.m. on a big drop, and that is currently at $105 for a gain of $41 or 64.06%. Absolutely phenomenal return on this as well. Any hedge that you go up over 30% is good, but the key here is to keep it small, because if you spread the seeds like I'm showing you guys in this video, you will make a ton of money, but there's no need to spend a ton of money to make a ton of money. If you do nail it correctly though, you can make a lot, but I don't believe in trying to time the market that much. You just want to have some downside exposure to protect your overall portfolio. And now to another hedge that I did put on today as well, around the same time as the other one. 14 hours ago, I bought two IWM $110 puts for $40 or $20 a piece, and this one is way further out the money. It's essentially about 40% out the money, 45% out the money, but it does have until August 20th. So if we see a big pullback, these will significantly go up in value, and I do plan to flip these out because I don't think we'll go in the money. And if you guys are unaware, the iShares Russell 200 ETF is basically like shorting the NASDAQ, right? Or like the tech and a lot of tech-centric companies are included in this. But we have been on an absolute tear, and we have really not been back to this 110 level in the past year. If we take to the 5-year, during March, our bottom at March 20th, we were at $101.40 on this ETF. So that would have been in the money. But even right after in April, this contract would have been out the money. So I don't expect us to drop back down to our March 20th lows. So this is really more of a swing trade for me. And I do expect probably a couple 100% on this if we do get a big downtrend. Now, what else did I put on today? I did a TLT. I did 5 of these at $22 a piece, and this is a good one. I really do like this one. It expires July 16th. Like I said, I bought 5 at $22 a piece. I'm down $1 on this, so it really hasn't changed. But essentially, when bond yields go up, because with inflation, people don't want to buy bonds. So that drives the iShares 20-year Treasury bond down in price, which makes the yield go up, because on bonds, the yield is actually fixed at a certain price that you get paid per year. Now, what makes that yield go up and down is the price for the bond. So the yield is fixed, but the price of the bond goes up or down. And that is what this iShares 20-year Treasury bond ETF is tracking, is the 20-year Treasury bond. And when it goes down in value, that means the yield is actually going up. But when it's going down, that means investors are selling out because they don't think their 1.7% yield as of right now will outpace inflation. So you wouldn't hold on to a bond and lose money on that. So this does look like it will continue to go down. And if we pull it out to the 1-year chart, we are actually down 16.95% on this. And that is just because there was a high demand for bonds pretty much throughout 2020 because the pandemic and things were really uncertain. But if you pull it out to the 5-year chart, we are currently at $135, and we have not been back to this level since about November, September, even July of 2019. But on a regular basis, this 20-year Treasury bond ETF would trade at about 120 to 115, even hitting a low of about 112 November 2nd, 2018. So this does have a substantial room to come down if bond yields keep going up, which they will have to, because inflation, like I just talked about, nobody wants to own bonds if they're going to lose a lot of money on them. So I do expect this to come down. I'm not sure if it'll come down to the 110 level. If I were to imagine, it probably wouldn't. It'd probably come down to the 120 before it started to stabilize more. But these puts would go up significantly in value. So I do think this is a good trade as well. Futures on CNBC are up about 0.3% across all indexes, and they are fluctuating quite a lot, but I do expect us to move down tomorrow. But if we do pop a little bit, that doesn't mean these trades are off the table. They will lose a little bit of value, obviously, but I do think these trades are very much on and alive, and I do expect some significant gains from these. Now, as far as the overall market, I think it's going to be a lot of down 2%, up 1%, down 1.5, up 0.5. You know, it's going to be a lot of back and forth, but we are going to gradually continue to move down, especially with this inflation data. And there's really no end in sight for this until this inflation subsides, and we're not talking about inflation subsiding until next year. So there's definitely going to be some headwinds in store for us as investors, and this is a perfect time to put on a hedge to protect yourself as well as make a lot of money. So that is how you guys can get rich, by playing a market crash or correction. Now, depending on the severity of this crash or correction that is most certainly on its way, I don't even think we have seen the start of it. That really depends how much money you can make and what your strikes are in certain trades that you do make. Now, I do expect all these trades to do very, very well, and I have no plans on selling these. These are a hedge against my long-term positions, and that's all you should trade them as. You shouldn't be buying these to try to make a bunch of money. You should be putting small amounts into these if that is your kind of thing, hedging your position to potentially make a lot of money. So if nothing happens, if we continue to rally for whatever reason, which is very, very unlikely from now, or if we just trade sideways, you're not going to lose a lot of money off your total portfolio value. So that is what I am doing. Feel free to do a similar strategy. I know a lot of people are starting to now. That is why I positioned myself a couple of days ago, and that is why my positions are currently up quite a bit as of right now. So if you guys got anything useful out of it, hit that like button, consider subscribing to the channel, as well as look out for the Patreon when that is available in the next day or two. With that being said, I will see you guys later. Take care.